Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Everybody, welcome back to the Investing Podcast. It is Monday, October 17th, 2016. I'm Andrew Hall. Joining me, as always, Ben Nye. What's up?
Doing well. Good weekend.
Good. Yeah, solid weekend.
Your birthday.
My birthday. 29 years young.
Still under 30.
Still under 30. Gonna keep marching on.
Yeah.
Last year with a 2 in front of my name, my goal for the year is to live to 30. So we'll see what happens. Stay tuned. Subscribe. See if I make it back tomorrow. And we'll leave you with some cliffhangers every afternoon. Tweet something out. You'll be like, oh no, it's Andrew going to make it. And then I'll show up every morning. So subscribe, follow us on Twitter, all that good stuff. At Tusk Media LLC. Also on Facebook. Yeah. Facebook.com/Tusk Media LLC. And we're going to talk a lot about social networks, and we can hear what people really like, and maybe we'll create some profiles so we can really capture our core audience here that's so involved. But let's jump in. Let's talk a little bit about the markets. Futures are down for the most part, not down a whole lot, certainly not necessarily an alarming rate at this point. They've rallied a little bit. Dow futures down 13 basis points, S&P futures down 13 basis points. NASDAQ futures down a little bit more, 22 basis points down. Gold down 10 basis points. Oil up about 0.25%, still hovering above $50. But also want to talk a little bit about some other issues we have going in the broader market, so to speak. In particular, we're going to start off with bonds.
Yeah, so what's interesting is that you're seeing all these headlines, bond yields going up because the Fed's hiking. And bond yields are going up quite a bit today. But what's notable is that that's mostly on the far end of the curve. So like the 30-year bond, the 10-year bond, those bond yields are rising, prices falling, yields rising. But on the 2-year, that's pretty much stationary. So I think it's a little, it's foolish for people to say, it's all because of the Fed hiking, because if the Fed was going to hike, you'd see the short end of the curve going up as well. But the 2-year is stationary at about 84 basis points. So you lock your money up for 2 years, you get 84 basis points a year. So making a killing there. Yeah. But the big news from last week was that Yellen came out, was pretty dovish. Then Boston President Eric Rosengren came out and said, we should just hike now. But Yellen is in control of the Fed. What she says goes. And and you're not really seeing a response to Rosengren in the market on the short end.
Yeah, and dovish Yellen is kind of the Yellen I think we almost expect by default. So in some regards, her commentary wasn't that unique.
No,
it's kind of what you've come to expect given this kind of prolonged period of inactivity, so to speak. Let's talk a little bit about the Yuan. Did I say it right?
I think you got it.
Yes.
Got the inflection and everything.
So we've talked a little bit about currencies on this show and just kind of what's going on. And obviously, you got kind of these big global pictures. You got everything. Obviously, the EU story has dominated things, and then once you start talking about Asian currencies and things like that, I think people kind of just start scratching their head and trying to figure out exactly what's going on, because I think we tend to think of manipulation, things like that.
Right.
But in particular, what are we seeing right now?
Well, I mean, you remember back to last year when the yuan was depreciating pretty steeply, and that caused a big sell-off in markets at that time. So now you have the Chinese fixing it to 6.73, which is higher than it's been in the past. So when you're thinking about the yuan, it's inverse. So there's 6.73 yuan to the dollar. So if that's going up, if that 6.73 is rising, then the yuan is actually getting weaker and the dollar is getting stronger. So the Chinese depreciating their currency. What's interesting, they fixed it at 6.73, but in trading it actually rose about 6.75. So again, when it starts to go into territory that hasn't been ventured into yet, everyone thinks it's going to just continue to trend. So keep an eye on that. We have seen that have serious market consequences in the past. And it's interesting to me that it's happening right before the U.S. election, kind of confirming what Donald Trump has been saying for a while.
Yeah, and it's kind of one of those things where I feel like we almost get a market overreaction over here because kind of as we talk a lot about patterns and things that we've seen, and trying not to react to data and what's actually coming through the pipeline. But I just remember in January, starting to see the market just sell off so much, and obviously this was a factor in it, when you started looking at the Chinese currency. And it's like by the time you could really do a deep dive on where the opportunities were and things like that, the market had bounced back.
Right.
We were through it.
Yeah.
When the panic was over, we moved on. But, again, this is something I would think could have some impact really on the markets leading up to the election because
Yes.
there's so much uncertainty. I was talking with somebody actually at church yesterday just about who's going to win the election and this and that and how are investors viewing it. And I was like, the average investor, I don't know, and I don't want to insult people out there, but we're kind of in the same boat. I don't think we have a firm, clear-cut scenario of if Hillary Clinton wins, this is the outcome, the market will do this, then Y will happen.
Right.
And if Donald Trump wins, 1 will happen, then 2 will happen. I don't think anybody's really got that mapped out all that clearly, and yet we're still dwelling on all this uncertainty. And it's not necessarily uncertainty of downside or up versus upside. It's just uncertainty.
Right.
And I think the markets and participants in particular love uncertainty. So when you start to see some of this, headlines coming out with the Yuan, it kind of, I think, just could
Right.
reach a boiling point, hypothetically.
What's interesting is that it's actually having consequences in the real economy. When I was on the Del Frisco's grill, their conference call on Friday morning, and they were talking about how when they see, prior to the elections, they've been in this business for about 30 years, prior to the election, they always see this kind of stasis, like people are just holding off because of that uncertainty.
Yep.
And then in the past, what's happened is no matter who wins, just consumers go out and spend
Yep.
because they know what's going to happen,
Yep.
and there's just this more confidence in the economy.
I was, to that point, more anecdotal evidence. We're just peppering
Right.
that off at people. This is unscripted, too. Let's just keep going back and forth. But I was talking to a guy yesterday that works at a car lot, sells cars, and he said October's been incredibly slow. He said the October before an election is always slow. And then he said no matter who wins after the election, people remember, hey, I need a new car.
Right.
I'm going to go get it now. But everybody just kind of sits on their hands, and it's almost kind of an excuse not to be doing something.
Right. So, like, if you're watching this, and when you watch the October data come out, and if it is weaker, and market sells off on
Right.
that, that might actually be a buying opportunity.
Absolutely.
And it has been in the past.
Last thing we've got, one of the last things kind of on the market in general is the EU, the European Union, making trying to get a deal done.
Trying to get a deal done
with our favorite European country, Canada.
Yes. So they've been trying to get this deal done for 7 years, and now they're so close, but now there's this town, it's bigger than a town, it's been characterized as a town by the press, but it's 3.5 million people.
It's a big town.
In Belgium, called Wallonia. They have voted against this deal, and that's holding up the entire process and throwing it all in jeopardy. And so this is a 7-year deal. It's kind of ironic because one of the arguments for actually becoming a member of the EU is that you now have this big bloc that has this economic leverage in doing deals. So
And then you have this lone wolf.
this lone wolf in Belgium. The ironic thing, even more than that, is that it is in Belgium, and that's where Brussels, obviously, which is where essentially the capital of the EU is held. So
Real strength in the backyard.
Yeah, so that's a tough thing for them. So this deal would actually get rid of 98% of the tariffs between the two entities. But I guess we don't know what's going to happen now. So will Wallonia get a special incentive? I don't know. It could be a pretty well devised strategy for that town. And, if all the EU wants to do something and they hold it up, they can
they're going to get taken care of. Yeah, they're absolutely going to get taken care of. We're going to move to a few specific stocks here in just a minute. We'll jump off, I guess, maybe talking a little bit about Apple. There's a lot of speculation and reporting that Apple was going to build a car. They'd mastered the phone, they'd mastered the tablet, they'd mastered the computer, mastered the watch. Let's jump to the next logical piece of personal electronic wear. Let's jump into cars. That's off the table now. How stunning are you? How stunned are you?
I'm shocked.
It's just unbelievable.
I mean, in the past, Apple has always made everything in house. So of course they were going to make a car because they have so much experience in building mechanical.
Apple's known for their motors.
Yeah. No, I always thought just a technology company, wouldn't they be cannibalizing their margin and diluting their margin by building a car? And it would seem like a huge distraction. Why not just build the
Components.
build the components, build the tools that they can now license to all these various manufacturers, like Cadillac with Apple.
Yeah.
Has sort of a ring to it.
The Appalac. I'd buy the Appalac. So
Make Cadillac great again.
Yeah, make Cadillac great again. So Cadillac cars are in your boat now, so you got to figure that one out. Let's talk a little bit about a couple individual stocks. Keep digging through here. Hasbro, some strong numbers, really being dominated by one particular franchise.
Yeah, it's the girls category at Hasbro is up 57%. Put that in context, the boys category is up 2%. So girls in America are being taken care of right now.
That, or we're having 57% more girls than we used to. So those out there thinking about the wussification of America, look at Hasbro, might have a point.
Disney's Princess, Disney Princess and Disney Frozen are the driving categories in that market for them. So
I missed the whole Frozen vote. That's like a cult.
I can't believe it's still going on.
It's still going. It's crazy. You see that stupid little snowman everywhere. People love that stuff. So Hasbro, strong on the heels of Frozen. Couple other topics here, social media wise.
Yeah.
Interesting survey. I guess to kind of frame some context of this, we found out officially on Friday that the Twitter Salesforce deal was off.
Right.
I think it was mostly assumed to be off, but officially came out Friday. Since then, Twitter Friday afternoon was trading at 18.05 and pre-market today at 16.71, so it's down about 7.4%. Salesforce kind of did the opposite, as you might expect. People were not real excited about this deal from the Salesforce perspective. It was trading at 69.62, rallied up right now in futures. It's trading at like $74 pre-market, so about 6.5%. Salesforce CEO just said, kind of generically, it wasn't the right fit,
Right.
which is really a wealth of knowledge there.
Yeah.
Really pulled back the curtain. But some interesting data here, and maybe we'll see if we can get a screenshot of this on the video. See if intern Barrett can hook that up. But just looking at social media platforms that people use on a monthly basis and that people call quote unquote their favorite. So this takes a look back to spring of 15 all the way up to fall of 16. Looking at Snapchat, Instagram, Twitter, Facebook, Pinterest, and Google+. What stands out to you?
Well, it's interesting. So Piper Jaffray did this poll of teens. So this is all teens. And what's interesting to me is that Snapchat is the most commonly used, and it's also their favorite social platform for teenagers. And in terms of favorite social platforms, we have Snapchat at 35, and that's up 11 points. Facebook is actually tied with Twitter.
Yeah.
Which was interesting to me because everyone says, Facebook's doing everything right and Twitter's doing everything wrong. And yet among this demographic, not only is Facebook and Twitter tied as the favorite social media platform, but Twitter's actually ahead of Facebook in terms of which are used at least once a month. And that's the first time in this poll that's been the case.
Yeah, I think some of that almost lends itself to when you start to think about the platforms and what they're used for. I mean, I don't know about you, but I feel like Facebook's becoming an older and older social network, whereas I think Twitter and Snapchat's almost the epitome of this, that quick, instantaneous reaction style posting is really it's all the rage with all the kids. So that seems to be kind of a big player there. The interesting thing to me was like Google+, which the interns were saying maybe is YouTube, but I almost feel like if that was YouTube, the numbers are too low in terms of only using it once a month or what have you. But 22% of people in their teens using Google+ once a month.
That's surprising.
That's weird.
Only 1% say it's their favorite though.
That's right. So not a lot of popularity there. And then other things like Pinterest, I would have thought would have been more popular. But
I agree.
What do I know? I'm 29. I'm not a teenager.
But what a buy of Instagram by Facebook.
Yeah.
I mean, that talk about a good deal.
Yeah. You go through and you scrape those numbers, combine those, and put all of those under the FB ticker, and all of a sudden you've got kind of that whole market corner.
Yeah, I mean, and they, Facebook core has been declining in popularity per this poll, but Instagram has been, saving them.
There we go. Ben, anything else to wrap up with here? I know you and Sam are going to have some fun with some numbers here.
Yeah, we're gonna talk about a pretty neat trade that we put on last week.
Very good. We'll let them do it. This is the Investing Podcast. Stay tuned. Hit subscribe. All that good stuff.
Now we're about to talk to you about Teva. which is a company that we followed for quite a while. It's a drug company. They just bought a Mylan's generic drug business. So now they're the biggest generic drug manufacturer in the world. Tabo's an Israeli company, and now they're increasing their leverage, and their stock has been just on a downward spiral.
It really has.
Weeks.
Yeah.
It seems like every day in PM meeting we talk about what are we doing with Tabo now. So full disclosure, we're long Tabo, but we actually put on a really interesting trade, I think, on Thursday last week. So what we wanted to do was really minimize our downside risk, and in case something really explodes on Tabo. So there are a couple of risks when we're thinking about Tabo. We're thinking about not only their biggest drug, Copaxone, which will have generic competition most likely in 2017. There's a judge ruling on it in February. But I think that's probably priced into the stock by now because everyone knows like all this competition stuff.
Yeah, I would think so.
The problem is like the generics business. Like, what is this acquisition?
And that's what this kind of sell-off I think was generated from. Everyone kind of knows what to expect with Copaxone. There might be a little bit of uncertainty, but the generics, not a lot. The bad report came out 2 weeks ago.
Yeah, so you have all these analysts bullish on Teva, but at the same time they're downgrading the generic space. We actually talked to one. We're not going to name the broker because we don't want to call them out right now. But one of the analysts who just covers the generic space in general said, generic space is terrible. Don't buy anything. The analyst who covers Teva comes out later that day and says, yeah, my colleague over there, he doesn't know what he's talking about. Teva's doing fine. So there's some real miscommunication in what actually is going on.
It sounds a lot like Ben in our PM meeting. It says, don't listen to those guys, listen to me.
Yeah, what can I say? So we put this trade on. We used puts. So the reason we were looking at this, we looked into November saying, if this just continues, we really want to minimize our downside. What would be nice is if we actually had some leverage on it so that if it did fall below a certain price, we'd actually be making money as the stock fell. And the reason we were able to do this was because the implied volatility on those puts was exceptionally low in our view. And you want to talk a little bit about that?
So I think, so the first thing is volatility determines the price of an option. And so the first question when you're trying to price an option is, what is volatility? So I think intern Barrett will put these up. These are just two little charts basically. This is the last 5 years, this is the year-to-date one. So the year-to-date one shows it a little bit better, but as you can see, this blue line is the conditional volatility. That's what our true volatility is. This orange line is just our unconditional volatility. And so as you can see here, volatility is down lower than like the historical kind of average what you get if you just plug it into Excel. And so the implications of that is that options are cheap right now. And so that means that, or in our opinion, that means now is a good time to perform our option strategy, which is called gamma scalping.
Yeah, and I'll demonstrate that on the board.
All right, so two components of gamma scalping is your delta, the options delta and the options gamma. The delta is essentially how much your position, the value of your position changes with moves in the underlying stock price. So every dollar that Teva's stock price moves, how does that affect our like net loss, net gains?
So to give you some context of what we did, so at the time we put the trade on, Teva, the underlying shares, were trading at 44 spot, I think it was about 30. So that's the price of the underlying stock. Now what we did, we put on options. So we bought the November, so they expire in about November, I think November 18th or something like that. So we put the November 40 puts, and so if Teva's stock falls below 40, all of a sudden we're protected. At that time, the delta, we can use the triangle here, the delta of the puts was 0.20. So you want to describe what that means?
So delta of 0.2, all that means is as Teva's price moves, that's how our position's going to move. So if Teva's price were to move up $1, then our gain will lose 20 cents.
Because the puts gain in value as
Right.
the stock decreases in price.
Right.
Now we bought these options, the options themselves, at 40 cents for 100 contracts. So that means if Teva's stock fell to 43.35, that 40 cents would turn into 60 cents. Falls to 42.35, goes to 80 plus 20, 40 plus 40 is 80 cents. But the thing is, when you're looking at options, delta does not stay constant as the price moves, because delta changes.
Right.
So that's what we call gamma.
Mhm.
Gamma is the change in delta for a given change.
Yeah, it's going to be the rate of change that delta changes.
So to put that in chart form, if we are...
We swap sides.
Yeah, let's do that. If we're doing a chart of delta, we have 0, 0.5, and 1. This is the delta, and this is the stock price. And in this case, our strike price of the options, when we're starting to make money, is $40. The line here. So when the stock price is above 40, the delta is relatively low. So you know when we were at 44.35, we only had a delta of 0.2. So it goes almost like this before it accelerates to 50. Delta is always 50 at the strike price, and it accelerates all the way up like that. So you get it up at 50, and then as it gets closer and closer, it gets closer and closer to 1. And then ultimately, if you're trading at about $30 before expiration, the idea is that you basically have a short position, so every option is going to be 1. So this means that as our stock price falls, we're actually increasing our short position. So at $40, we'd have about a full long position and a half short position, but at $30, we'd be fully short of the stock because the delta has moved to 1.
Yep.
So what gamma scalping is every moment around here, you're trading the stock in order to keep your delta weighted position equivalent. So as the delta is increasing, you're actually buying the stock in order to offset the increase in the short position.
Yeah.
So that's gamma scalping, and kind of complex, but a lot of people do it, and it's an interesting trade to use.
I did want to mention that one thing about gamma scalping is there are stories of people who have made money doing it, but it's really more of a time for, like, right now, Teva's share price is just falling.
Right.
We don't know that we should be short the position right now, obviously, by having our long position. Gamma scalping is a way to just kind of preserve your wealth, and try to, like, guarantee that kind of no matter what happens, your position, the value of your position kind of stays the same. And
Right.
hence, you're scalping your gamma to be delta neutral, meaning that no matter how the price moves, your position stays the same the whole time.
And it is expensive when you talk about commissions involved, so make sure you take that into account if you want to employ the strategy.
Yeah.
That's it for us.
Hey everybody, now it's time for the quote of the day, everybody's favorite part of the show. Today, the quote is going to be a quote from Frozen, which, as we talked about earlier, Hasbro is doing very well on the girls' side of things. So it's a little quote that sticks with me. It's been in my heart ever since I watched the movie. Sometimes when I'm feeling lonely, I think back to this, and it gets me right here. That quote is, "Some people are worth melting for." That's from that little snowman guy. Olaf. So here's to you, Olaf. Some people are worth melting for. This has been the Investing Podcast. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.